balance sheet, first thing I do is I will go and write down my format. So I see I have sales 300,000, less cost of sales 155,890, less debtors allowance 14,2. Then when I go further nominal, I see there's an insurance. Insurance is 15,050. Interest on fixed deposit goes to interest. Interest on overdraft goes to interest. Water and electricity. Water and electricity. Bad debt. Wages. Rent income, it's an income. And advertising, another name for advertising would be marketing. Okay, so my income statement is prepped and ready to go. Where? Oh, I forgot stationery. Stationery is 7790. Okay, so my income statement is prepped, ready to go. Let's do the face of the balance sheet. So the face of the balance sheet, first thing I do is I start at the top. I see I've got capital, less drawings. Okay, did I ask you to do note 3? No. So you're going to do everything here as a calculation. So I'm going to add the costs. So it would be land and buildings, equipment, accumulated on equipment, and then later we'll see if there was additions and depreciation. Fixed deposit is for Capita Bank, and I see it's 20,000. Trading stock I leave out because I want to see if there's a stock take. Then I see debtors control, it's a receivable. Bank is on the debit side. Petty cash. Creditors is a payable. And loan, loan, OPSA is 80. So now my prep is done and now I start with the adjustments. By the way, in the test, it's going to be 2 separate questions. I'm going to ask a question income statement, a question balance sheet, a question note 3. Yeah, so that you don't have to transfer stuff that might be wrong. Okay, so let's go on. It makes my life easier as well. So now they say, we have done a stock take. Now what do I know? That is my inventory. So I can immediately go to inventory, say the 20,000 plus the 200 gives me 20,200, but I'm first going to wait because there might be adjustments. I also know, yes?
Why do you add stationery under trading stock?
I'm not adding stationery into trading stock. I'm adding inventory. And inventory is the stuff I counted, the stock that I have left, as well as the consumables I didn't use.
So, stationery is consumables?
Yes. Stationery, packing material, fuel, groceries, service material, they are all consumables. Yes. There can be, but in school, rarely. But after school, you will have more than one. That's why this is actually a block and top, because you'll have more than one investment. Most businesses have more than one investment, but not in school.
But why do you have more than one investment?
Because it depends. Maybe I made a fixed. So maybe I made a fixed deposit at Absa at an interest rate of 9% for 2 years. Now I see FNB has a new product where they say if you have a fixed deposit for 3 years, we give you 10%. So I go and I put money in FNB. So now I've got two different fixed deposits. I'm not going to show it as one because the interest rates are different.
Ma'am, why didn't you put in the 70,000 rather than put?
Because I've this 20.
No, I mean for NZG.
Where are you, baby?
Exercise 9.
I know, but where in exercise now?
There's
Trading stock. Okay, so why didn't I, this is a good question, why didn't I put that trading stock in, but I put this one in?
Because that's the stock take, the physical one.
That's it. Remember the one in the trial balance. So in other words, it works like this. If I look at my trading stock, I have a balance BD of 17,340. This is the amount I got in the trial balance. So this is what the bookkeeper has, right? Then I go do a physical stock take, right? Now which one do you think is more true? The books or what you can see? What I can see. So what I can see is going to be my real balance. Can you see? So I'm going to start next year with 20,000. But now I see there's a discrepancy. Okay? There's a difference. So why is there a difference? Maybe because we ordered stuff that was delivered, but we never let the bookkeeper know. Maybe a debtor returned goods, but we never let the bookkeeper know. But in this case, can you see there's a difference and it's on the debit side, meaning it's a surplus. If the difference was on the credit side, it would be a deficit. So what's the difference? 2260. See why you mustn't do that in a test. So I'm going to write in my income statement, trading stock surplus, ne? And please, you write down, unless you've shown it like this where I can see it on your paper, you write this, 20,000 less 17,340, and it gives me 266, 0. Yes. Yeah, it's an easy one. So how it works is if your answer is right, you get your 2 ticks. If your answer is wrong, I go look. The problem is not just a straightforward one like this. The problem comes in if there was a return of goods or if we sold goods that wasn't. So in other words, there's a difference in that 17.3. I still need to add or minus something. Then it becomes extremely important because a lot of people forget it. They just do this and then they lose all their marks because this final answer is wrong. You see? Okay. It's just a good habit to pick up in accounting to always show your calculations, especially income statement and balance sheet. Okay. So, now I also see there's stationery. Now what do I remember? Stationery, I bought 7790. This is what I bought. So I have still left 200. How do I know it's left? Because I was able to count it. You must only count stuff that you can see. So the stuff that is used is thrown away. So you can't see it, it's not there. So if there's 200 left, it means 2590 was used. Ne? Does that make sense? And what do I want to show? That 7590 is my expense because the 200 that is left, I'm going to use it next year. Can you see? It's actually like a prepaid expense. So now I go to stationery, I subtract the 200, it gives me 7590. Must I repeat what it is? So remember, you bought 7790, right? So that's done. But now you want to see how much of the 7790 did you actually use in this financial year. So if I have to draw you a picture, it looks like this. Here's my financial year, ne? I bought 7,790. This is the total that I bought. But 200 wasn't used. So I'm going to use it next year. So how much did I use this year? You see, you are just classifying it and fitting it, going with the time that you used it. So can you see the 200 will be part of next year's income statement? Does that make sense? Yeah, that's why I added that 200 with inventory, because it's consumable stock that I didn't use. I'm going to use it next year. Okay, and next year, which is actually tomorrow, I'll be very happy because I don't have to run to Spar or Pick n Pay to go buy Andy or stationery. Okay, yes.
And then, so then let's say you were doing that trial balance for next year, because they did use 200.
So if they...
2,990.
No. So what he is asking, please listen. So what's going to happen now? Next year, if you look at your post-closing trial balance, there's most not a nominal section. But in your balance sheet section, there's going to be consumable stores on hand, and they're going to say it's stationery, 200. Okay? So next year, when I open my books, I will say, oh, you know what? I'm going to take that out and put it back into stationery so that I can use it. So your expense starting next year already starts with the expense of 200. Okay, let's go on. So the next one, yes?
Why are you writing like the data already without reading all of the adjustments?
What?
Why are you writing the data of the stationery without actually going through all of the adjustments first?
Oh, okay. I'm stupid. I should have done that, yeah. But, you know, it's not really a train smash. If there's another adjustment, I just do it, scratch that out and change the total. But you are right, it's wise not to do it. Okay. So, the fixed deposit matures 31st March. So the whole fixed deposit is going to become cash. So there's no fixed deposit. But I'm going to add it to my cash. Yes, ma'am?
Question, isn't it happens after, I think, our financial year?
Yes, exactly. So remember what I said, and I want you all to listen now. Look at this. This is non-current and current, right? So non-current is assets for after 12 months stock. Okay? Now, is that 20,000 still going to be there after 12 months? No, because it's maturing within 12 months. So now, that 20,000 can't be shown as a non-current. It has to be shown as a current. Okay? So, we classify it as a cash, but remember now, the actual word there is not just cash. Cash equivalents. Okay, so within the next 12 months, I'll have 20,000 rand. It's a short-term thing. Is everybody sure?
So then the 20,000
So if fixed deposit ever matures, okay, why does it change? Okay, no. If fixed deposit matures and turns into cash, then it goes with cash and receipt equivalent.
Cash and cash equivalents. It's literally just the movement between bank accounts. So if you have two bank accounts, you have a check account, which is your main account where everything, remember, it's your entry account. Now I take money out of that account and I put it into a fixed deposit. Now I can't use it. It's not part of the money I can use. Now the time goes, it elapses, we get to a point where that matures, meaning now the fixed deposit closes and the money goes back to where it came from. Yes.
Isn't it said it was not capitalized, so that you separate the interest, right?
Yeah. So now, what that means is I'm not going to. So it's the same principle as with a loan, ne? But other than a loan, there's an option of it not being capitalized.
So ma'am,
So if it's capitalized, we say it's reinvested.
so ma'am, would we add that?
Then you would add the interest and all of it would mature. But because it's not capitalized, it means that I say to the bank, don't wait till it matures to give it back to me. I want every month my interest, which is very dumb. Ne? Unless you won the lotto and you want to put 100 million in a fixed deposit and live from the interest. You would rather reinvest your interest, because what principle is it? If you reinvest it, it becomes part of the fixed deposit, so you're going to start earning interest on the interest. You see? So it's more clever to capitalize than to not capitalize.
Oh, so it's also like,
Yeah, but it's your choice. They give you a choice for it.
so that interest is gonna write in the income.
And it doesn't matter. So in other words, what I need you to understand is capitalized or not capitalized has no bearing on the interest in my income statement. The interest in my income statement, both for the fixed deposit and the loan, is what did I earn for the year? What is the interest for the 12 months? It's not what did I receive or what did I pay. It's literally what's my income and expense for this past financial year. The only difference between capitalizing and not capitalizing is in the balance sheet where you're going to put it. So in the balance sheet, if the interest is capitalized, you're going to put it with the fixed deposit. If the interest is not capitalized, you're going to show it nowhere unless there is outstanding interest, meaning an accrued income, then it would just open up for it. Because they're going to keep on knocking. So let me repeat before we were interrupted. So if the fixed deposit interest is capitalized, it means the part that we don't see here must still be added. Because if we see it here, it means it's already been added. Remember, this is a summary of my books to date. So if interest is capitalized, it means that 450 should already be part of that fixed deposit amount of 20,000. And now I tell you, oh, there's still 100 rand outstanding. Then what are you going to do? You're going to add it to the 450 and you're going to add it to the fixed deposit. If they say to you it is not capitalized, meaning I get it, then I will add it to the 450 because now it's an accrued income. Because it's a, if they say there's 100 rand interest outstanding, then I still need to get the 100 rand. So it's accrued income. So I'm going to add it to the interest on fixed deposit. And where else will I add it? Accrued income. And where's accrued income here? Receivable. So in other words, the part of the interest that's not in the trial balance yet, if it's capitalized, I add it to fixed deposit. If it's not capitalized, I add it to receivables. It's just where you put it. Okay. But you'll see, we'll work out a lot of exercises. Here we go. Next one. So now they say interest is not capitalized. Now, how much did I already receive? 450. Do I know, I need you now to listen. Do I know if this is all the interest I earned? No. How will I know if it's all the interest I earned? I must go and calculate the interest. And they tell me it's 9% a year. You see? Can you see that? Okay. So now, if I draw a T for interest on fixed deposit, I have a balance now of 450. That's what I already received. Now on this side I want my profit and loss, meaning the amount that needs to go to interest income, meaning the amount that I earned this year. So in other words, what I earned is not necessarily what I received. Ne? So you study so hard that you actually earned 80%. But when the teacher marks, she only gets 75%. Can you see the difference? What you earn is what you're supposed to get. What you get is what you get. It's not necessarily what you earned. Okay, so now we want to see how much did this fixed deposit make me? How much did we earn? So they say my fixed deposit is 20,000 and I receive 9% interest a year. Can you see it's 1,800? Can you see they still owe me? Can you see that? Okay, so let's go again. I want to see the difference. Adjustments is always the difference from what I'm supposed to receive or pay and what I did receive or pay. You get it?
Yes.
So now the difference is the 450 I received. The 1.8 I'm supposed to have received 1.8. So how much do they still owe me?
1,000.
Go listen to the video.